Hello and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on today's episode, I'm joined by John Feneck, a Wall Street veteran who has worked for Merrill Lynch, JP Morgan Chase, Sprott, and Kitco over the course of his illustrious career. He is currently the founder and president of Feneck Consulting. We're going to discuss the continued divergence between gold and the gold mining stocks, along with what it will take to close the valuation gap, why silver is poised to play catch up with gold in 2025, the accelerating commodities war playing out between China and the West, and so much more. I hope you'll enjoy my conversation with John Feneck. John Feneck, it's great to have you back on the show. It has been a while since we chatted, so I'd like to start by asking, what are the main themes and trends you're currently watching when it comes to the economy and financial markets that you think more investors should be paying attention to?
Sure. Thanks, Jesse. I think the Fed is always on our number one on our list, right? And I know that people disagree with that because they think the Fed is broken. You have to respect the Fed at this point because we were talking 4 rate cuts for 2025, right? This was just in November. That rhetoric changed December 18th at the meeting to 2 rate cuts. That's major in terms of a shift, right? And so you have to watch metrics like non-farm payrolls coming in hot on January 10. We've got CPI on January 15. You've got to watch that to make sure that that's not getting out of control, because this is going to drive Fed behavior. Another thing that's going to drive Fed behavior, in my opinion, which is, again, not a popular opinion, but it's true, is that Trump is going to have his way. And he is going to find a loophole, I think, to get in Powell's grill. And I don't know how that looks or how it shapes out, but if he can't get Powell out, he will get members into the Fed that are going to be supportive of his way of thinking. And he did that with the Supreme Court, right? People seem to forget this because it was a while ago. But if you get control of the Supreme Court and the Fed, you've got a lot of power. And I think that means lower interest rates. Trump does not want higher rates, right? So that is very supportive of the things that generally you and I talk about, like gold and silver.
So with Trump coming into office, he's being sworn in just a few days here. How do you think that will shift things in terms of the overall economy as well? Because he's talking about tariffs. Some people are saying this is just a negotiation tactic. He's just throwing these numbers out there to kind of start high, and then when he gets into that negotiation, he will then be able to come out of that with favorable terms. What are your thoughts there? Do you think that's what he's doing, the art of the deal? And what do you think are the implications for both the U.S. economy and the geopolitical situation with Trump in office?
I don't think any guest, unless you're a true macroeconomic person, like full time, could talk to tariffs, because this hasn't happened in this magnitude, Jesse, for decades, right? So really don't have a current precedent to look at and say, oh yeah, this is how it's going to play out. I do agree that there is some poker playing going on. That's just Trump's style, right? Like if you look at how he negotiated China at the end of his last term. There was a lot of stuff that was said earlier that didn't come to fruition in the final deal. But I will say that countries are now much more aware of what's happening in the U.S. I think under Biden, there was sort of like a lull. It was sort of like people that were running other countries were sort of like, just everyone was coexisting. Now it's different. I think Trump is going to rattle some cages, and that is going to cause volatility in the broad market. And that is going to cause volatility in gold and silver in a good way, because gold and silver love uncertainty. And there's a lot of uncertainty coming, to your point, with tariffs, right? As far as what kind of an effect that has on the economy, I just will bring up again, we've been in a rally since March of 2009. I've been on your show now, I think 3 years. I've talked about market corrections. I've been right a couple of times. I've been more wrong than right on the corrections, because this is a market that is just very, very resilient, right? Hindsight is always 2020. So when you look back at how tech reacted in 2023, in 2024, very resilient. That doesn't mean you can't lose a lot of money, right? Because the Mag 7 created a lot of the outperformance in the S&P the last 2 years. And if those 7 stocks out of the 500 don't continue that outperformance, you're going to sit around and say, wow, my 401k doesn't look as rosy as it used to, right?
Hey guys, just a quick break to hear from today's sponsor, ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. Yeah, that makes a lot of sense. Let's shift to the gold space because there is still quite a divergence when it comes to the performance of the metal itself and of the mining stocks. I mean, even some of the big majors, Newmont, Barrick, seem to be underperforming. People expected the gold miners, especially as we go down the chain to the developers and the explorers, these were going to be levered plays on the gold price, and that the gold sitting where it is today would maybe create a mania in the equities, and it hasn't. I'm wondering what your thoughts are. You said before we hit record that the divergence between the gold price and the gold stocks has never been this large in history. Walk us through what you're seeing there and what it'll take for that valuation gap to close.
Sure. Let's just take the price of gold and Newmont, NEM, as an example for your listeners. If you look back at the 2011-2012 rally, gold obviously topped out around $15.70 an ounce, right? Like that was the high at that cycle. Newmont was printing cash and the stock was doing much better in terms of price then, but their margins were much, much worse, right? And yet the stock was double plus with the price it is today at $38.80, right? So why is that? Well, Newmont and many of the large caps since the 11-12 rally have not been the best stewards of capital, number one. Number two, they're getting better, though, and I think that needs to be pointed out. If you look at Newmont's balance sheet, it is getting cleaned up. They divested of a lot of mines, in the fourth quarter of 2024. This is seemingly not showing up in their price at all. So we started the stock at $37.05 recently. I'm going to add more after earnings, which is coming in February, because I want to make sure that earnings get out of the way. They had a really bad quarter in Q4. So I just want to make sure that I'm correct on that. But I'm nibbling here on down days because it is the largest holding in GDX, Jesse, and that is the largest product in mining, right? So I was just on the phone with a client yesterday talking silver, and we'll get to that in a minute. But there is one stock that I can point out that is a top 5 holding in all 3 major ETFs in the silver space. So why not own things like that or Newmont, where you know that as fund flows come into the ETF, these stocks have to get bought, right? Unless they get dropped as a holding, which is unlikely. So, that's where my mutual fund ETF background comes into play. I've seen how fund flows can really affect tech, right? In my career, I never just sold mining or commodities. I sold tech. I sold S&P like funds. And I can see, that is what's driving S&P 500 behavior the last couple of years is fund flows, right? It's like going into the same kind of stocks. Everyone owns the same stuff. That's dangerous, right? Because in 08, 09, you had that same phenomenon happening with Washington Mutual, Citigroup, a lot of the bigger financial institutions, and that ended terribly. So it can end really badly. And that's why I just pointed out, a minute ago to your listeners, do yourself a favor and set an appointment with a financial advisor over the next, 1 to 2 months and just say, hey, how do you think we're going to look going forward? Let's forget about what happened from 09 to now. Thank you for that. But let's look forward and see how we have to be more, mindful of asset allocation, because it's not going to be like throwing darts, I don't think, over the next 1 to 3 years. You're really going to have to think more about things. So getting back to your point on gold and the divergence between the price of gold and gold stocks, we don't just play in the large caps like Newmont. We play in the explorers and developers because these have really been crushed. I mean, Newmont's been disappointing, but I mean, there's some explorers out there that just look ridiculous right now. I mean, In no particular order, I just met with 1911 Gold. They just raised almost $8 million. The symbol is AUMBF in the States, AUMB in Canada. To raise $8 million as a 10-cent stock is not easy, right? Look at their market cap in that rally in 2011 and 2012. Their market cap back then was about $1 billion, Jesse. It's trading under 20 million right now. That's a 50th of the market cap that it was at 1575 gold. Why is that? Well, I mean, there's a number of things you can look to and point to, but we try to look at the positives, not just the negatives, Jesse. And the positive is that in 2.5 years, this company is on track to produce. It's not going to be a 5 to 7 year wait as it is for many juniors. So with gold cranking, this is a proxy for gold, right? And that's the way we look at stocks like that. At 10 cents, it doesn't need to go back to $1 billion market cap. It can go from 20 million to 60 million and you make a ton of money. And so that's where we, see things like that. First Nordic is another one, FNMCF, FNM in Canada. We look for, in this case, a person that ran Discovery Silver, which is one of the biggest juniors in Mexico for silver, right? Huge deposit. Taj moves over to First Nordic, goes to Sweden, and is hitting the reset button with gold, right? And this guy has 3 million ounces of gold. They just raised 11.5 million. I'm pointing these stocks out, Jesse, because it's really hard to raise 8 million, 11.5 million as a junior, right? These are positive things. When you see companies raising 500K here, 700K there, it's less positive because they're just creating enough money to survive another 3 months, right? Like it's these companies are finding buyers for their stock, which is positive. And I think with First Nordic, you go from 28 US to 35 or 40 pretty easily because you've got 3 million ounces of gold identified. You're going to drill. You've already said that in December publicly. So in 2025, you drill and you find another 1 million ounces and another 1.5 million ounces in $3,000 gold. That's really, really bullish. And I think people will come around to stocks like this.
Well, let's talk about silver here because the gold to silver ratio is at around 88, which is very high. You said you think silver will catch up to gold here in 2025 in terms of its value. We're obviously nowhere near previous all-time highs, but people are always pounding the table and talking about $50 silver. It can happen in the blink of an eye. Don't blink. There's all this sort of hyperbolic language and headlines out there surrounding silver. How do you see silver performing, and what equities are you looking at right now to capitalize on this undervaluation in silver relative to gold?
Sure. And let's just define catch up. What I mean by catch up is that you pointed out a good thing there, Jesse, the gold to silver ratio. Gold to silver ratio is simply an ounce of gold divided by an ounce of silver, and that is around 88 to your point. I think that number gets lower this year. So silver will catch up gradually to gold, but gold will maintain its value, meaning that I don't see a dip below 2,300 in a meaningful way. That's sort of our new floor, the way we see it. So if gold, goes from, let's say, 2675 to 2300 and silver stays the same, well, that ratio narrows, right? And it gets lower. And so it could happen that way too, right? Gold just sells off a bit and silver catches up as people get behind more of an industrial metal story, let's say. I just think that silver is for rabid investors. People get behind stocks and they're very loyal. And you saw this with the action in 2021 when people made a run on silver. It failed, but it was interesting to watch because the Wall Street Bets crowd and Reddit crowd really got behind our sector. And it wasn't just then; it was actually a couple of different times since 2021. I think it's going to happen again in 2025 because when you see a market sell off, Jesse, this will ignite that interest again to say, "Holy cow! I made all this money in these stocks." 2-3 years ago. Let's go back and have some fun with these because our sector is very thinly traded and silver as a commodity is more thinly traded than people think, right? So if you go to coin dealers right now, they're telling you we don't have inventory. There's no inventory, right? So you're paying massive premiums to buy silver coins as a consumer. That should tell you something, right? This is going to be a good year. Another thing that was good last year, Jesse, for silver was that we broke $30 an ounce. That's a big round number that was out there, just like 1575 gold was out there for a long, long time, right? Silver was out there at $30 resistance for 11 years. So when you break through that like butter last year, you went all the way to 34.70. Now you're at 29.30, right? Like you can actually go from 29.30 back to 34.70, I think, pretty easily this year to test that major 35 level. And if you get through 35, that brings in a test of 38, and then 40, and then ultimately $50, which is the all-time high roughly. And I think, we're not calling for 50 this year, but we are calling for a test of, 35 and 38 for sure.
And what are some of the equities that you're looking at right now in the silver space?
So the one I gave you earlier that I was alluding to, a top 5 holding in all the major ETFs, Pan American, PAAS. It's just a very well diversified stock like Newmont is. It's real. It's trading at under $21 right now. I mean, in a hot silver market, this is worth a lot more, and you're just going to get a lot of mutual fund and ETF flows into the stock, I think. Aftermath Silver, AAGFF, AAG in Canada, is our largest silver equity holding at around 3%. The reason for that was their February 29 news last year, where they basically said, hey, in addition to all the silver and copper we also have 99.9% battery grade manganese. Manganese is not an easy commodity to find. It's heavily produced by the Chinese. This is the biggest, possibly at least the top 3 deposit in North America for manganese, right? So as that story develops, it broadens out their possible revenue stream as they get from development into production. And I'm not the only one who saw this. Eric Sprott, after the Beaver Creek meeting with them in September, put $5 million in the next week, and then he put another $10 million in October of 2024. So there's a stock that's completely cashed up, right? Like they don't have to do a raise. They've got a big boy who's coming in that now owns just under 25% of the float, I should add, which is rare for Eric. He usually does 9.9s or 19.9s, but he's over 20% in Aftermath. And we're bullish on the stock. I mean, it hit 50 cents US briefly in October. It's trading as we speak at 30.31. I think it goes back to 50 pretty easily this year in a hotter silver market.
Well, let's touch on copper, because this is a commodity that's been put in a very favorable light by a lot of big banks in 23 and 24. There's the S&P Global report that gets widely cited, just how essential copper is for the energy transition. And they're projecting out, this is how much copper we're going to need based on net zero goals. This is how much we currently have access to, etc. I've had other people kind of poke holes in that sort of thinking and say, well, the energy transition is not going to happen the way that most politicians and big thinkers, as Rick Rule likes to say, would believe that it will. I wonder what your thoughts are on the copper market, why it hasn't quite performed as people have expected. How do you feel about copper in relation to the energy transition? And are you bullish on the metal in the long term?
I'll take the last one first. I'm very bullish on copper in the long term and in the intermediate term. The short term is sort of like the head scratcher, right? Because if you look, let's just take a listener, right? Listeners saw Goldman Sachs get real bullish on copper 2 years ago. They saw Morgan Stanley get real bullish on copper last year. These are two huge institutions, right, with a lot of influence. So now let's look at the annual returns of copper, right? January 1st, 2023 to the end of 2023, I think you lost money in copper barely, like let's say down 1%, right? Last year, same thing, like flat performance from the beginning of the year to the end of the year. But if you traded copper during either of those 2 years, you made quite a bit of money. And we did trade copper stocks up and down, because it's a very tradable trading range, right? So it's like $4 is kind of holding right now an ounce, $4 a pound on the bottom side, and $5 has been sort of resistance that has proven again to be resistance in 2024. So you're in this range that you can easily trade the commodity, you can trade the stocks. Longer term, you don't want to trade. You just want to buy and hold, but we're just not there yet because there's too many questions, to your point, about, how energy transition looks, what the needs are for copper. I mean, I just think in talking to traders, there are shortages at the exchange. Copper is going to be it's a very needed commodity going forward in the long term, but in the short term, there's concerns about the China-U.S. rhetoric, right? And like, how does China have, what kind of a year does China have? That's important to factor into, your prognosis for 2025 for copper. So all that said, we play equities mostly, as you know, Jesse. U.S. gold had really good news in November. USAU, they got their permits in Wyoming for their copper gold project in Cheyenne, which is, again, a couple miles from infrastructure there. They've got rail, they've got a highway right nearby. I actually visited the site 2 years ago. I think that a stock like that that's on the NASDAQ with 12.2 million shares outstanding has the potential to fly. And if you don't believe me, just look at the chart. I mean, they announced the permits around $6 a share. It ran to 862, I think, real quick, like less than a month, and then pulled back on the financing. But they financed into strength, raised again, 10.2 million bucks. Not easy to do. US, by the way. And now they're cashed up to, tackle some things this year, but they're led by a guy who has built mines in his career in much more onerous places like South America, Central America. Wyoming's a layup, for people like that with experience. And we like good jurisdictions like Australia too. Like we buy Inflection Resources, AUCUF in the States, AUCU in Canada. And that's because New South Wales is a good jurisdiction, but also they have a relationship with a major in Anglo, where Anglo is funding the majority of their drilling. So it's not that typical junior exploration company, Jesse, where you've got to go back to shareholders every 4 to 6 months, raise more money. They just talked to me, 2 days ago and said they have, about 2.5, $3 million bucks in the bank, but they're continually getting funded by Anglo, and Anglo's liking what they're seeing. If you look at their October news, Anglo is moving forward with one of their projects from phase 1 into phase 2. And it sounds like they have so many projects that there's a likelihood that at least one or two others are under, are being looked at by Anglo. And if that happens, that unlocks value, right? And again, look at the chart. The chart that, doesn't lie. Stock was trading at 11 cents pre-October news. It ran to 21 on the news, almost a double in less than a month. And then now faded back to 12. This is why I love junior mining. It's like, why wouldn't you buy the stock back at 11 or 12 if you knew, which you do, that there's potential for 100% gain in the stock? Like it's just crazy. So that's why we spend a lot of our time in the smaller stuff right now.
You mentioned China. I'd like to pull on that thread because there does seem to be a conflict. It's been going on for some time now, but obviously we're seeing China versus the West in terms of commodities, a commodities war, you could say. We've seen export restrictions for some rare earths, graphite, some other things coming out of China. That could definitely ramp up depending on how the geopolitical picture turns out. Obviously, the ban on imported converted uranium, enriched uranium from Russia. So that kind of plays into things as well. How do you see the China versus USA picture playing out in 2025 when it comes to commodities?
Yeah. Look, there's always the possibility that it's a broader conflict. Let's hope not, like with an invasion of Taiwan where the U.S. gets involved. And under Trump, I don't think that's going to end well for China. This is going to be a major thing that, again, the market's assigning a very low probability to. But let's set that aside for a moment, Jesse. Let's just look at what's happening in real time, which is, let's take a commodity like tungsten, for example. So I met with a couple of CEOs that work in this space. They tell me that 80% of tungsten in 2024 was produced in China, another 10 or 11% in Russia. That gets to 91% of global production of a metal that is used in body armor. It's used in ammunition. It's used in tanks. It's used in tech. Like, this has got broad uses in things that the world needs and the U.S. needs. So where do we get our tungsten from, right? That's the kind of thing that we spend a lot of time thinking about, where it's like, this is not on anyone's radar in the analyst community. Neither of these stocks I'm about to talk about have any analyst coverage. And it's like, yet they've got a billionaire investing in one. They've got a huge mutual fund out of New York City investing in another. It's like, this is why it takes a lot of time to find names like this. But when you find them, you want to latch on and keep buying dips, because until that problem gets resolved, which I don't think is going to get resolved easily, these companies have a leg up. So one is in Nevada, one is in Idaho, And the one in Nevada is called Guardian Metal. It's something we talked about in your program at lower prices, but I still think it's a good entry point here. GMTLF in the States, GMET.L in London. There's no Canadian ticker. Um, the CEO is a young guy, but he is very aggressive. He just, announced a few months ago that, hey, we did this little raise. And by the way, we're buying a second mine potentially in Nevada right now. That deal hasn't closed yet, but it's close. And again, the other company in Idaho has, I think, 15 to 20 million shares outstanding, very tightly held. I talked to management there, and they kind of told me, okay, management owns this. We've got a couple of key players that own that. You've got a couple brokers that own the stock, but really, it's got a very tight share structure, and that's one of the main things that we look for. And so, when you have tight share structures with good ownership, and the metal that they're trying to find is 91% produced by countries that don't like the U.S. How are we going to get that production? It's not happening, right? And so you pointed out, Jesse, there's been some metals in the news in 2024 where we've already seen that kind of stress play out in prices like antimony, different things like that. I think I was on one of your show in April and we talked about this where Morgan Stanley talked about antimony. And I was like, this is bizarre. Like they never talk about bizarre little commodities that no one heard of before. But if they're getting interested, I'm getting more interested. So I think the world is coming around to the idea that this might be more of a commodity war or a currency war than bullets being fired in 2025.
Well, let's talk about Feneck Consulting, your performance in 2024, what your plans are in 2025, the strategy that you employ, and where people can find it and hire you as a fund manager if they're interested.
So we don't directly invest people's money. We basically put out our trades, and then people have the ability to follow those trades or not. It's up to them. But basically, what we do is we have the newsletter, which is the easiest way to get access to what we're doing. But again, it's not as real time because newsletters in general are flawed. Secondly, we have the real time updates, so it costs more, but it's basically in your inbox as stuff happens, right? So we look at public news, we send that to people, and we put comments on there saying, hey, this is important and here's why. A good example would be Fireweed Metals recently put out, something where they raised $35 million as a grant. I mean, that's a significant part of their market cap. Why wouldn't that be something that someone would comment on? But a client would look at that and say, I don't understand, how is this going to be, accretive right away, John, right? And so there's things like that I can help clear up or talk about larger themes like CPI or non-farm payrolls or GDP. We talk about economic stuff in the emails all the time too. Or you can just do phone calls, right? Like people come to us and say, hey, look, I've got a graveyard of mining stocks from 5 years ago that I have no idea if these things are going to do well or not. And it's a fair question. And I think you have to be honest with yourself as an investor and say, okay, I made these investments thinking XYZ, but ABC happened. So now I've got to pivot away from what didn't work and take that capital and use it into something like we just talked about. Like these names that I'm talking about, I think have a lot of potential, but it's not that I didn't make mistakes either. I make mistakes all the time. It's about understanding the entry point that you had as being too high and then dollar cost averaging down so that your blended cost basis is reasonable. So as the stock rallies, you actually make money, right? And gosh, I mean, I just did my year-end numbers. So to your question, we were up 25.77 last year. We're very proud of that. It took a lot of work, grinding every week. Very little time off in the summer, no time off at Christmas time, because we wanted to send a message to the investment community that, this is our 9th year now doing this. And, in a year that was pretty darn good up until November 5th, U.S. election, right, for mining stocks, it got derailed there. Yeah, we were selling in September and October pretty heavily. My followers know this because we were just getting out of the way. I didn't know which way it was going to go, honestly. And so I said, let's just see what happens and then take that hand and run with it, right? See what we're dealt. And then we just kind of sat on our hands a lot, Jesse, in November and just bought everything back in December that we liked, right, at 30% off. It's unbelievable the sell-off that we saw from November 5th to December 31st. So, these are the kind of things that we teach our investors. Like, you've got to be able to see trends developing and then get out of the way sometimes and get back in, because we think we're going to have a great 2025. So everything is up on my website, fenneckconsulting.com, and I try to answer a lot of my stuff, directly as opposed to farm it out.
Great. Well, I'll put a link in the description below to feneckconsulting.com for people who want to check that service out. Thank you once again, John, for coming on and sharing your knowledge with the audience.
Of course. Thanks, Jesse.
And thank you for joining us today. This episode is brought to you by ARC Silver Gold Osmium. For all your precious metals needs, head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.